Hello guys, tonight is Friday as you can see, and Friday is always we are going to see a live session. So I know a lot of you guys have questions, so this is the time to ask question directly live. So for this week, we have the opposite what did happen in the second quarters for Apple, Facebook, and Twitter. Okay, it's the opposite. Second quarter, I think it's in August or September, I don't remember. We have seen that Facebook and Twitter, they have a very large gap down. It means they lost a lot. Okay, both of them, Facebook and Twitter. Now Apple at the time, it has a gap up, so it was all good. Now this week, as we have seen, Twitter and Facebook have gap ups, and Apple has a gap down. Now Apple has a gap down, but it is not that big, because $16 gap down for Apple, it's not a big deal. Why? Because Apple goes up and down daily, like $5, $4, $6, $7. So when it is 16, it's not that big deal. Okay, but still it is a gap down, and those people who bought Apple and they are waiting for the news, it was bad news, so they lost some money. Now this is a part of the game, okay, especially earnings. I always said that, and I always try to make you understand that this time for the earnings for any stock in the stock market, it is a very risky days. So either you take the risk or you exit the trade, or you don't buy it on the earnings day. Okay, you can buy it after if you want to. Now the gap up and gap down, it is just the reaction of traders to the news. Now what does it mean? It means millions of traders. Don't think that it is just few people who are just waiting for Facebook, Twitter, Apple, Amazon, the other one, Google, and some big stocks, Tesla and the other stocks. Don't think there are just few people or few thousands of people that are day traders. No, there are millions of traders all over the world are waiting for the news and try either to short the stock or to go long with the stock, depending on the news they see. It means when they hear the news, they make their mind and they act. So if you are with the news, with the gap up, for example, there are good news in most of cases. So here it means that you will have a very decent and very large profit in a little time. This is why day traders, they like these ideas of news. It's just because when the news comes, the stock will be so volatile, so it moves so fast up or down, and this is what day traders like. It means the stock should move very quick. We have a very high volume and the prices are going so fast, you just wait for a few seconds, few minutes, you can have some money. Okay, now if the stock is normal, it can go $1, $2 or 3 or 4 or 20 cents or 10 cents. It depends on the stock, so it's not a big move. Okay, it's not a big move, but to have a big move, you should have earnings. You should have other kind of news. That's why a lot of day traders, they use the news in order to see what are the stocks that are possible to move too fast. Okay? It doesn't mean that they use the news to make money. No. It's just when there are news, there are stocks that move fast. And this is what all the people like. And this is what almost of the day traders like. Now, as you can see, we are still in general mood of the market. These days, for this week, it means this week, the market is good in this week. And in general, 2 or 3 or 4 days this week, the stock market is doing good. As you can see, the major indexes are doing very good, and that's in general. But understand that in earning news, it's totally different. It has nothing to do with the mood of the market or with the mood of the stock. The stock is going down in a downtrend, yes, but the news we can have gap up or gap down. So the news has nothing to do with the trend itself. Sometimes it goes with it, sometimes it goes against it. Okay? So this, it means the earning news is just a piece of news that the traders use in order to make some money. Hello, or Probis. Hello, how are you? I think today, since we are in the Halloween holidays, a lot of people are together in the family. So for me, today, I just want to continue with the live session today, even if the people are not coming or few people are coming. So it doesn't matter. I will just try to be live and see the other guys when they are coming and they ask questions. So if there is no questions and there are just a few people, so we will continue until I answer all the questions and then we end the session. So as I told you before, the market was nearly good this week. So I will just go and show you in a few minutes. I will go show you what did happen into the market, and we see the gap ups of and the gap downs. So okay, so let's go to the chart. As you can see, okay, so you see here Facebook, as you can see, it is a downtrend. Downtrend, it means it was going down for a long time. It's not this gap down that makes Facebook bad, okay? It's the downtrend. Now you see the downtrend, as you can see, it's going down, going down, going down here, and then we have the gap up, okay? So there is a downtrend for Facebook, and then we have a gap. We have a gap up. So the gap up, let's say here, from 146, it goes to 151, but in the morning, it opens at 155, okay? So I bought Facebook, and I was in this gap up, okay? Now, let's go to Twitter right now. So Twitter, as you can see, there is a gap up, okay? You see? There is a gap up here. The gap up was from 27.54, it goes to 33. And I have made videos about this gap up, and I have explained 33.67. Yes, 33.67 here. Here is the high. Okay, so let's take this just to show you very clearly. Okay, see, there is a gap up, and then the stock was going up for the whole week. It means from so here Wednesday, Tuesday, and Monday. So 3 days they're going good. Before we have 2 days last week, okay, and then it stops going up. Now for Apple, as you can see, okay, as you can see, when I told you the gap down is not big, it's just because before, like this, see this candlestick, from the low is $206.99 to $219. It means this candlestick is $17. Okay, $17 just for this candlestick. So the gap down, although the gap down is $14.74, although it is a gap down, but it is not that much because the stock is big. If you compare it, for example, with Facebook, Facebook has been doing so bad in last second quarter. Okay, so Apple has gone down, but not that much as Facebook and Twitter last second quarter. Okay, so that is for Facebook and Twitter and Apple. Hi, free trader. Now, for the general market, we should go and check the general market indexes just to see where is the market now. Okay, so let's go to the market again. Now, as you can see, okay, as you can see, S&P 500 was going down. Now this week, from Tuesday, Wednesday, Thursday, it was good. It means it's going up. So we will never know where this 500, this S&P 500 will go. But as you can see, this week it was going up, which is very good. Now, Russell 2000 is the same. We have 4 days going up, which is so good. Okay, and Dow Jones also for 3 days going up, 2 days going down, but still it's going up. Okay, so we will never know until we see other weeks if Dow Jones and the other major indexes, if they go above the resistance line, we understand that we are going to the bull again. But if they stay here, as always, we are still in the correction. As you can see, we are still in the correction. We are not going out of it until we see until this thing change. Okay, now let's see. Aura Promobi says guidance and not reporting certain sales from here got Apple investors unsure. Now listen. I will tell you something very important about investors. You should say, instead of saying investors, you should say traders. Investors, they don't sell and buy each day. So this is a common mistake, and this is always told in the big channels. Always they speak about investors. Investors are frustrated. The investors are stressed. The investors have nothing to do with this because they don't care. When you invest for a stock, like let's say we take Warren Buffett, do you think that each day he will see what the stocks have been doing or each earning news? No, he will not decide to exit a trade or to sell an investment is after many years, after he saw that this investment is too bad. It's not in every earnings on every day he will check. So this word for when I say to you ora pro nobis, this word investors is false. Okay, it is false. Because what makes the gap down is the traders. They are not investors. Investors, he will not sell. Because he can't have time to sell. If he sells, if all the investors sell, if there is bad news, the stock will collapse. From 100, it can go to $10. If investors, they sell, as they say. Which is not true. This action is... these actions, okay, are done by day traders, hedge fund, day traders, shorters, or short sellers, day traders. So what happened to the stock is sellers, not investors. So just to make sure you understand this word, because it was always in the media, in the big screen, in TV, in big websites, they speak about investors. Investors, they don't do nothing. How can just because of earnings he will sell? He will not sell. Okay, he will not sell because of that. Now, Free Trader said global economy growth has slowed down. This is always they say about this. Okay? Just 3 months ago or 4 months ago, Dow Jones was doing so good, and we have a trend in Dow Jones for 3 months. Why they don't say there is economic slow growth? No. There are some companies that make money, others they don't make, others they go bankruptcy. This is all the time, except in the year when we have what we call a crisis, like 2008 crisis. This is a big crisis. Okay, it affected all America, and that was sure an economy collapse. Yes, that is sure. But here, I'm not speaking about that because we are not in that area. Hello, clown with Twitter account. He said, what's level 1 options? I don't know what is this level 1 or level 2 or level 3. I have no idea. Oracle said, Warren Buffett has shares, I believe, in Apple. Yes, he has in a lot of stocks. In about 48 or 49 stocks. And some stocks are doing good, some stocks are doing bad. So Warren Buffett is the same as anybody else because he is in the market. But he doesn't sell because there is a bad year, he will sell. Or there is a correction, he will sell. He keeps his companies for 10, 20, 30, 40 years. Because he has a lot of money. He gets dividend from these companies. He is rich. He doesn't need the market goes down or goes up. For him, it's nothing. With his dividend, he has billions of dollars only from his dividend. So he doesn't care, and he doesn't pay that much tax. So understand that don't compare Warren Buffett with common investors, small investors, or small traders. So it's not the same. Hello, Minyapan. How are you? Clown with Twitter account said, I didn't say that Facebook is failure, but numbers wasn't that good for analysis. No, see, the analysts, they just say what they think. But they don't care. If there is a gap up or gap down, who cares? Analysts, they get their money because they do a job. They just analyze companies and they give their estimate. Okay? So when they give their estimate, they are paid. That's it. But Apple or Facebook or Twitter, if they make money or they lose money, they don't care. Who cares about this? It is you and I and the investors who you invest or you buy or sell. This, it will affect us, but it doesn't affect them. So you should always understand the real thing about analysis. Analysts are just people who do their job. Okay? Who cares? If they say Facebook is making $2 or $1 or $3, this is just what they say. Now, who makes the action? It's traders, not the analysts. Traders, they make a decision either to go long or to short the stock. This is what it is, the most important thing you can take into account. Minya Pan said, I am fine. How are you doing? Yes, very good, man. I am very good. Thank you very much. And understand that the executives of companies, and they get their money from the company, and they are getting too much money because they put how much money they will take from the profits of the company. All the companies are making profits. Even Facebook has, for example, it has a gap down or a gap up. It doesn't mean nothing for the company because the company is making money, so it doesn't matter. Okay? So it is the day traders who go long to make the gap up, or they go down to make the gap down. Clown with Twitter account, is there strategy in option? Yes. If you follow my strategies, you can buy option according to my strategies. You can buy calls and puts. Okay? Using my strategies, yes. It's the same as stocks. Clown with Twitter account said, how to know that company made good earnings? It's the company who announces after the market close. You find this if you put, for example, earning calendar. So I will show you. I will show you, for example, when you put, for example, earning calendar, you will get the calendar daily, how the, let's say here, so earning calendar, now let's go. Okay, now look at this. Now this is the earning calendar from Yahoo Finance. Let's say yesterday, okay, we are now on Friday, 10:24 minutes. Okay, now this Friday, how many earnings we have? We have 63 earning news for these companies that you see here. Let's say Baba, Alibaba. It means the Chinese company. It has today, it has the earnings. Let's see Alibaba. What does it do? Baba. Let's say here. Stock price. So there is no news. Okay. So it says here Friday, November 2nd. It means today. Okay? So the news is before the market open. Oh no, before the market open. Let's see here. Yes. Let's say 5 days. Okay. So this is, let's say here. Let's say let's take the chart better. Okay. So today the stock opens at 152. It goes down to 147. It means it lost $3.66, which is $2.42. So it is not really a big gap down. It is just $3.66. So the news doesn't affect Baba a lot. Okay. Now, if you want, as you can see here. As you can see here, this is today, before the market opens. I think it will be bad news. That's why the stock has gone down, but it hasn't gone that big. Okay? 3.66. Okay, see? Alibaba is like Facebook into a downtrend. You see downtrend? It is so big. Alibaba was like 211.70 cents on the 5th of June. Okay, now it is 147. It means it does the same as Facebook, the same thing as Facebook. It's a downtrend. So now let's go back to our earnings. We have 63 earnings. You know, it doesn't mean that when we say that there is earnings, it means there is a gap up or gap down. It depends. Okay? Now here, it says that the surprise is minus 35.62. Okay? So, RYI it has a gap down. Let's see. Yes, see here? This stock has a gap down. 0.99 cents. It goes 10.33. Okay? 9.58. Yes. It's 10.33. I don't know. It says 34% surprise. So you see, there is a gap down. Okay. So if you want to check all the stocks, you can go and check that. Okay. So it's a very, very long list. Oral probably said position traders or investors don't sell over gap down like Apple today. Yes, understand that people who are waiting for too long, like position traders, like for a few years, or you are an investor for a long years. Okay, so you are not going to buy today and tomorrow you will sell because you see a gap down or gap up, or the stock goes up or go down. These are looking for the companies that can become bigger. They speculate on these companies, so you will stay long to see. Okay, you should stay years in order to see what you are thinking about is true or false. It's not 1 day or 1 month or 2. That's why don't confuse yourself with investing and position trading. Investing is for the long run, so don't try to check like that. OLED and WTU tanks on earnings. So OLED and WTW. Let's see these stocks that he mentioned. Oh man, that is a big one. So it is $26.59 59 cents. It is 20%, 50. So 20% for this. And the other one that you say, it is $20. It is 29%. Man, that is too big. That is too big. That is too big. 29. It means nearly 30% of the stock has gone in one day. Okay. Yes, it could be very bad, and it could be very good also. Okay. Yes, crazy drop, but understand that the good thing about the bad news or good news, when it is before the market, it is very, very good to make decision what to do. If you are a day trader, you can make money easily. Then when it is at the end of the day. Okay? Now, if it is before the earnings is before 9:30, you just leave the stock, you don't buy, you don't sell until the market opens and see where it goes. Because this stock, let's see again this stock. At least I will show you something. So this stock opens at 55. It goes down to 47. It means $8 from, we can take for example 15 minutes. So the biggest one, let's say we take 10 minutes. Okay, let's say 5 minutes. Okay, the first 5 minutes, as you can see, the stock from 55 it goes to 51, and then it goes down, and then it stabilizes. It means it's not a big deal. The whole day is done. So but if you are trading, this is the open, which is $55.15, but it goes to 51. So this is your chance to make money. Even if you get $1, $2, $3, and you buy 400 shares or 500 shares, you can make a decent money today, because the earnings was, okay, here it was 68. Now this is done in the morning. If you are in the morning also, you can make money if you want to trade before the market opens. Okay, so this is here the you can begin in the morning, and this is the very good thing if you are following news. Okay. So Cronoby said, I had the chance to short at 60 in after hours, right after earnings, but I didn't do. So Oran Pronobis, this is my suggestion always. Since you know you can use only the limit order, try always never, never, never to hold the stock in the earnings. Now, if you are a swing trader, yes, you can hold because you are in the trade and you want to see if there is gap up or gap down. Yes. But when you are a day trader, never, never hold a stock. If you are doing a trade after the market hours, you should finish it at that time. And before 8 o'clock, you should exit the trade. Okay? This is what you should do. Yes, but you say you are not sure, but the stock was 68. Okay? The stock was 68 when it closed. You said it is 60. It means it has gone down to 60. And it was going maybe in the next day. Okay? Maybe in the next day it goes from 60 to 55 when it opens. Okay? So if the news was in the afternoon, so just be careful, because if you get trapped and the market close, you can't exit the trade. It will be a very bad thing because you are shorting the stock. Understand, you are shorting the stock. Okay? It's better to use a put option and to leave it. It's better than to buy the whole stock 100 shares and then you get stuck in the morning. Yes, yes. You can hold, for example, a put. If you can buy a put, it's okay. Even if you lose the put, it's not that big deal. But you can make a lot of money if the stock goes down too much. Okay? That's the main thing. I think today I don't see a lot of my guys today. I think they are in the Halloween party or something, because I don't see the other guys who are always asking questions, and they are not here anymore. I don't see the other guys. So maybe it's because of the Halloween, right? Because I see only a few people tonight. So in this time of actions, day traders are better than swing traders in earnings, because day traders, you can exit when you see trouble. You can exit and you don't risk that much money. But for swing traders, you risk too much. Cheaper said, betting on earnings going up or down without doing your research is gambling. Now, what do you mean by doing your research? Since the company doesn't announce the news, how can you know if it is good or bad? You can't know. It's impossible to know the information. What research you will do? Apple is always doing good, but today it has gone down. It doesn't mean that Apple is doing bad. No, Apple has made money, but it is not the same as the analyst said. That's it. But Apple is making money, Facebook is making money, Twitter is making money. So all they are making money. So earnings is a very risky thing you can do. It's very risky. Either you bet and you risk, or you don't. In order to limit your risk, you can do options. You can do call and you can do put option in order to minimize the risk. Okay, that's the good thing you can do. Monty Woodman, thank you very much for coming. Good evening, Kareem. I am watching, but my laptop broke down. Can't get into my account, but watching you on my smartphone. Okay, that's good. Thank you very much. Yes, your smartphone, you can watch all the videos. You can watch the golden subscription. You can watch my training as always, even with your smartphone. Cheaper, Kareem, impossible to know for certainty, but you increase odds if you look at the tendencies. Now, cheaper. Can you tell me what are these tendencies that you should see? Facebook and Twitter, they were in a downtrend. They have been hit last time so hard. Okay? They lost a lot. They lost about 25 to 25% of their money. But they got a gap up. Facebook, it was doing so good, but it has a gap down. This has nothing to do with tendencies. It has nothing to research. You should just bet on the company. You do the earnings, yes or no. That's it. So there is no indication. There is nothing. And if you try, you fail. Whatever you try, you fail. You can't predict anything. Okay? So you said until I get Monty Mundo, until I get into my YouTube account, I have to go by my real name. Now, what does it mean? What does it mean? It means your YouTube channel is not good. And what's the thing? What has this to do with your real name? You can go to your channel and change the name of the channel, or make another one and subscribe to my YouTube channel, and that's it. So you don't have to put your name or someone else's name. Tamba Nair said, please check Apple. What do you think? Yes, I have just spoken about Apple. I can show it again. It's a gap down, but it is not a big gap down. I will show you again. So for those who don't see what I said about gap down, understand that there is a gap down. It's $14.74. It's 6.63%. 6.63%. $14 down. But understand that this is not a big gap up for Apple. Okay? If you check, for example, if you check Facebook, it has a gap up of, let me show you Facebook. Facebook, it goes from 217, it goes to 173. So 30, it means $45. $45 for Facebook. Apple is only $14. You see the difference? Now Facebook, it gets hit back very, very bad. Very, very bad. Even the gap up that Facebook has is small compared to the gap down. Okay? Gap down here, it is traders, and I am sure there are mutual funds that they sell. They sold Facebook and Twitter. It's too much. It's $45 lost from the stock. Okay? So it is so big thing. But Apple, if you can see it, the gap down is small. Okay? It's not that big deal. See here, it's not that big deal. It's not. But we will see in the future. If Apple is going up, it's good. But if it goes down, see here. See, this is the support line. This is the gap down. If Apple is going down, here it will be in trouble. If it goes down, it will be in trouble. But let's say Apple on Monday it goes up again, like this once. Okay? it could be, it couldn't be a bad choice, even if you have a gap down. Okay, so understand that. So understand that always when we have the earning news, it is always a risk, a big risk. You can risk a lot. So for the people who don't want a risk in their account and they don't want to have this trouble, they can sell and don't buy before the earnings. After the earnings, they can buy and see if things go good, but they can avoid this kind of risk. Oracle said G Pro was a nice earning. Let's see this G Pro. Oh, what is it? What is it? Nice earnings. It's a gap down. Wow, it is 24.23%, $1.74. I know GoPro, this company that makes, I think, camera. Yes, I know about it. It's a small company right now, not that big. Now, Tom Benair said, I want to buy call next week. But how do you know that Apple will go up? If you buy a call, how do you know? Did you see something that makes you think that Apple will go up? What if it goes down? So try not just to trade like this. You should not just trade to go opposite of the thing that happened, and you think that the market will go up or go down. So until you see some what we call some indications. Okay, this is what I mean by indications. It means you shouldn't just buy because you want to do the opposite. We have a gap down and you buy a call. It means you think that the stock will go up. So just wait until you see a few days what Apple or Facebook or the other will do. Oracle said Apple closed below the Ishimoku cloud. If you utilize that which is bearish, then what's this Ishimoku? Man, see, I don't follow Ishimoku or Bokukuku or Mokukuku. I don't follow these guys. Even the name is a weird name. Okay, so please stop following these indicators that only the stupid people are following, this Ishimoku and Bokumuku and the other stuff. So don't follow these guys, you know, or what they show you as indicators. This all is just a game of books. They make indicator, they sell it, they make money, millions of dollars of bestseller book. That's it. This is how the people make their money. There is no Shikobuku or Shikomoku. So, and I don't follow clouds. I like sunny days. I don't like raining or snowing. I like sunny days, man. I like the beach. I want to swim. I don't want cloudy days, okay? That is very funny. Hello, Juan Pueblo. Thank you very much for coming. Tamba Nair, you said, I made 500% on Amazon, same play next week. It's okay. No. You are betting on and hoping that Apple will go up and you make money, which is okay. Okay? I didn't say no. I say you are just betting like that. Okay? So there is no signal or there is nothing. Now, what if Apple go down you lose your bet. That's very simple. Okay, it doesn't mean that the Apple doesn't go up or go down. I don't speak about that. I'm speaking about the strategy. Okay, I'm speaking about the strategy, about strategy itself. Hello, wise man. Thank you very much for coming. So just doing something and it will work with all others. It will not work with all other stocks. It can work with some and it can fail with others. Okay, but it's okay if you can make money always. It's very good. So as you know me, I don't use indicators, clouds or indicators. Now we have around 300 indicators. I don't use them, and I don't believe they are useful. Okay, all these indicators, they were books in IDs. Each year someone comes with an idea and he say, oh, this idea will make you money. So it is the booksellers, and they put a lot of advertisement, a lot of efforts. So a lot of books are sold. All the people make money from the books, and that's it. And when you try to use this thing, it's worthless. So this is what I mean. Hello, MM. How are you? Hello, Karim. Thank you for the education as always from Morris. Thank you very much, MM. And thank you very much for coming. So Tamba Nair said, I will let Apple to bottom. I will be watching on Monday and Tuesday. Okay, that's good idea. Cheaper said, Ishimoku has been around longer than you, Karim. Yes, I didn't say it is new or it is old. Cheaper, understand what I say. I said indicators are inventions from some traders. You can invite an indicator and put it online and you sell it. Now people, they go and they try it, and most of the time they lose money, and then they create another indicator. That's why now we have 300 indicators. If one is good, we don't have 300. We have only one if it is used and it is okay. But you are playing with people. This is why the people, they don't understand. Who moves the stocks are people. They are not machines. It's not this cloud that shows you that the stock will go down because they know what the traders are thinking about what to do. People are crazy. They see a downtrend, stock is going down, and they buy to go long, and they stay 1 month, 2 months, 3 months, and they lose all their money, and that's it. Because the stock market is full of crazy people, that's why nothing special will work 100%. So this Ishimoku, it looks like Japanese or something. Before, there is no chart at all. Before Ishimoku, before the guy who makes Ishimoku, this name makes me laugh. But it's okay. It's okay. Before, they use only numbers. There is no chart at all. Before, all these indicators that you see. So a chart is just to indicate the price. That's it. And you think where the stock will be. That's the main thing. Tamba Nair said, always follow the price action. Do not follow Ishimoku. Now, Ishimoku is a very good name. This is very funny. Okay. Cheaper said, if Apple is bottom on Bollinger Band, then likelihood it will revert to the main. Okay. Now we go to Bollinger Band. Then Ishimoku. and then you tell me another MACD, and then you say RSI. So please stop by giving me these headaches of indicators. Okay, stop using things that it is lagging. Okay, so no stock will follow what you are following. Honorable said, I use price action range, catalyst, and other strategies to highly profit setup. Okay, you can do whatever you want. You can do whatever strategy you want. This is for centuries they are making strategies. If you succeed and you make money, you continue with it. Okay, that's the good thing about strategies. If it works, just continue with it. And if you add more rules, more things, and you make more money, it means that you are right. That is the main thing about trading and about investing and other things. So it means that something work. I don't say it works 100% because it doesn't exist, but it works to a certain extent that you can make money and not to lose money. Okay? But this Ishikumuku, this Ishimuku, this is good. So in the market, we don't have only Twitter or Facebook or Amazon or Tesla or Google or whatever, but we have 24,000 stocks and ETFs and mutual fund and the other. So all the stocks, some are going up, some are going down, some they have gap up, some they have gap down. This is the market. The market, each stock is doing his stuff. Sometimes they go with the market, sometimes they don't. Okay, sometimes you find the stock market is going down and some stocks are going up. So you can't just have a rule to say this stock is going up, this is going down. Okay, it depends. Tom Banayi said, what sector do you think is down now? Most of the sectors are down. Most of them are down. It's just because the whole market is down. When the market goes up again, you will see sectors that are better show up. But right now there is none. Most of it are going down. It's just because of the mood of the market. Some people are shorting, some people are selling, some people are using puts, some people, it depends on each person what he is doing, but most of the market is down. But not all the stocks are down. This is the most important thing I'm always saying is don't be confused because of the market and the stocks. Tom Banair said, do you think we are heading to bear market? No. We are into the correction yet. We don't know. I always tell, you should see the resistance line, you should see the support line. We are always in the middle. Now when we are in the middle, it means it is the correction. We are in the correction. And Nair, Tom Banair, I will show you right now in order not to ask me again about this. Let's take the Dow Jones. Now look at the Dow Jones, just to make sure you understand. Here is the correction beginning in February, here. Okay, let's say this. Now, this is the correction. This is the resistance line. It goes down, goes down, goes down until the 9th of February. It stops. This is the support line. Now, you see that 3 months ago, or 4 months, the Dow Jones was doing so good until it reached the resistance line, then it goes down again. It stops here, it goes up again. So we are into what we call the correction. The correction is from resistance line to support line. If stocks go down and cross the support line, this line here, if they cross, it means we are in a bear market. If it goes up, okay, it means that we are here. If it goes up, it means we will be into a bull market. But now the stocks are trading into a range, so we are in the correction yet. We are not somewhere else. Okay? And understand that the future, no one knows the future, so we should wait. Either you should use my strategies and try to find a bargain in the market. Stocks that go up you can find, but there are only few stocks. If they can follow, they can continue. But the whole market is troubled. Now listen, for me, I don't care about the market in 1987 or in 2008. I don't care. For me, I see, and it's clear for me where is the bear, where is the bull, where is the correction. We are this year in the correction. We don't move outside the correction. So people who from last December, they don't lose that much. It means this year they don't make that much money. And some people they lose. But in the whole market, people they don't lose that much because we are stabilized. We don't go to a bear market and we are not going to a bull market. Okay? But we don't know. We should see until things change. Yes, there is small gains because someone who bought in December, I will show you with a chart until you understand. Okay, look at this. Look at this here. Now, let's say someone bought in September, in October. Let's put a line where this is the line. This is today, for example. Okay, here is today. We put with yellow. Now, this is the yellow. It means if you bought yourself, if you bought Dow Jones before, it means you are making money. If you put it here, you made money. Here, you made money. Here, you made money. You made money. You made money. Because there is a big bull trend. But, okay? Let's say you bought here at the end of January. Now you lose some money. Okay? So it depends where you buy. But most of the people who bought in 2017, they still have made money until we have this small correction. Because they don't lose. If you bought here, in September 12, the Dow Jones was 22,000, now it is 25,000. So you are making money. Although this year you don't make that much money, but still you are making money. You are making 6% or 7 or 10% this year, although it is a bad year. Because you bought before. Okay? So this is how you see yourself making money or losing money. Now if you bought here at the beginning here, in beginning of October, now you are losing money. Okay? So it depends. It depends. Okay? But this is why a lot of people, they buy indexes because they will have the general thing about the market. And some people, they have been many years buying the indexes and that's it. If it goes down, they lose little money. If they go up, it makes money. And they don't care that much. It means they get what the market give them. If the market loses a lot, they will lose a lot of money. If the market goes up again, they will make more money. Okay? So they are not like day traders or swing traders who always think about the profit. Okay? So they are not. They are not competing with the market. They just give the average and that's it. Chipper said, if you are in the middle, then an iron condor may be good idea on SPY. Listen, I don't follow options strategies and do whatever you want. You can't be in the opposite direction and you make money. The market goes only with one direction. And options is not like stocks. Option, when you go down or you go up, it doesn't work like stocks. And for me, I don't use that much options, and I don't play the two both ways. I don't play going up and going down. I don't play this game. Okay? Or probably said, do history and the chart repeat eventually. Now listen, it's like the Chinese a proverb that says, you can't swim in the river twice. Now what does this mean? It means when you go to swim last year, that waters has gone because it goes to another place. So this year, even you are in the same place, you are going to swim to another water, although it is the same place. This is the market. The market, we don't say that it repeats itself. Each day is different. Each day is different. Next year is different. Last year is different. And it's always different. And there are some stocks that doesn't exist anymore. Let's say in the 1990s, let's say a stock, you have been buying a stock, and then now the stock goes bankrupt and there is no this stock. Are you going to buy it again? It's over. This stock is bankrupt. There is no this stock anymore. So try to understand that if you follow some strategies that are, it goes over all the stocks, it's very good, because you are looking at the price. You are not looking at the company, what is it? You are not looking, it is an IPO or it is an old company. You don't care about all this stuff. What you care about is price, like day trading. Yes, like day trading or swing trading. You have a way to enter, a way to exit. That's it. If you know when to enter always, you can make money. That's the good thing. It's a very, very simple thing. For example, some people, they go to futures. When you go to futures, there is no stock, there is nothing. It's just barely names. E-mini or whatever is the thing. It doesn't matter. What it matters is the stock, the price. Is it going up or going down? Whatever it goes, you make money. That's the basic thing about technical analysis. Technical analysis don't see the company or the asset. Either you are forex or option or futures or stock. It doesn't matter at all. What matters is only the price. That's why people, when they grasp the price, they can make money. Those they don't understand the price, they go to find reasons why the stock moves up and down, because the CEO is a good person or he has ethics. This will not make you money in the market. Yes, fundamentals are irrelevant. The only thing that could be relevant is a news, because it gives volatility to the stocks. Earning news or any other kind of news. When there is a news for a company, you go to the company and you see the stock, what is going to do. If the company goes, the company price goes with the news, if it is good, it's going up, you buy, because it's an opportunity to make money that day. This day doesn't change. It doesn't go next day it will be the same. No, only the news. Clown with Twitter account, you say Iron Condor is an option strategy, not a video game. Yes, I told you about options just right now when I speak about this Iron Condor. When you are into, because you don't understand what I'm saying. You think, when I speak, you think again. When the guy has spoken about Iron Condor, cheaper, I talk about options. So I know what is option, because I teach option also. Okay? And you shouldn't be into different strategies, going up and down, buying calls and buying puts and the other stuff, and you make everything and you think that you can make money. These are only the stupid people who are doing these strategies. Because when you are up and down, if the stock goes up, your option with the call, it goes good. The puts, you will lose the puts. So when you see yourself, you are just losing your money. This is stupid. When you are going to New York, you are in the middle of USA. Let's say you are in North Carolina. You are going to New York. Don't tell me that you have different directions. You go to Miami in Florida, and at the same time you are in New York. You can't do that in the market, and you can't outsmart with the market. The market is, you will be with the direction of the market. This is when you make money. Okay? If you are trying to outsmart the market with different strategies like this, you will never make any money. Okay? Yes, you say oil probabilities options used as hedges. Yes, but you lose those hedges because people who use options to hedge, it is not their money. Most of the time they are like mutual funds, or they are hedge funds. They use these options and they know they lose them. If the stock market goes up, they lose them. But they don't care if they lose because it's not their money. But if it is your money, okay, try to hedge and you see yourself. If your stocks go up, you lose all these hedges money. It depends on how much you put. So hedging is you are in the same place, but you might lose more and you don't think about it. Okay? Yes, but you can some people, you can use options. Some people are good at it, but it needs a lot of calculations. It needs a lot of, it means that you should be an expert in order to do this thing. So everything you do, you should be an expert on it, either forex, currency pairs, options, futures, and stocks. Okay? Everything you do, you should be an expert because there are a lot of calculations. The simplest one is stocks. Because the stocks, it's very clear. There is no other calculations you do. If you buy stock at $12, tomorrow it goes at 13, you will make $100 if you buy 100 shares. That's it. If it goes down $1, you lose $100. So it is clear and it is transparent. So you don't have to think a lot. But in futures, any move in the futures, it can wipe out your contract, and you will be at zero. You put 2,000, 3,000, few minutes, it will be wiped out. If you don't know what you are doing, because the risk there is too much, and you can make a lot of money if you are good. Okay? Yes. Because you say, or probably said 75% options go worthless. Why? Because option is one way. It's like the stock. If you buy a call and the stock go down, you lose the call. If you buy a call and the stock goes down, you lose call. Now, if you use the opposite, okay, you will have the opposite. It means always one direction. This is what I am saying to those people who don't understand anything in trading. There is direction. There is only one direction. There is no two. Okay? There is only one direction, either up or down. The stock doesn't do hundreds of directions in a day. Either it goes up, it goes down. Sometimes it stays neutral. It doesn't do nothing. Yes, but it's always making money or losing money. Yes, or this options also you can exit at any time, no problem. Yes, it means yes, more control over stocks. Yes, because the calculations are so different, they are not the same. Yes. So in anything you do, either you do options, or you do stocks, or you do futures, or you do the people who are good at day trading. I'm telling you something. You should go to forex, or you should go to futures. This is where you can make a lot of money, because if you grasp trading, you grasp the risk in futures, you can make a future. Okay? That's why it is highly recommended only for the good day traders. It's not for beginners. You should train a lot to go to futures. Yes, and understand that control or controlling your risk is different. Currency pairs, options, futures are different from stocks. So each one is alone. You should study it alone. Yes, forex. It's called currency pairs. Or when we say forex, it means you are trading currency pairs. It means two pairs, dollar with the yen, or yen with the dollar. And if dollar goes up, the yen go down, you make money. Okay? So this is how it works. So it's called currency pairs. Because forex is about currency. Like the dollar, euro in Europe, like the yen, like the other stuff. Okay? Oh, yeah. Forex, it's just when you, for example, you have dollars and you want to change them to euro. Okay? This is how they change them. Because of the forex exchange, they will give you how much each is worth. For example, the euro is more expensive than the dollar. Okay? But we have two pairs always. When you want trading, you find two pairs. Dollar with the yen, dollar with the euro, dollar with the thing. And you buy and then you do the trade. It's the same as stocks. But just the risk is different. You can make a lot of money also if you go to forex and you are a day trader. The most important thing is to be a day trader when you go to this stuff, because you can make a lot of money in few hours or few days or few hours. It's magnified the loss, and that's why it's called leveraged. Forex, options, futures are leveraged. Leveraged, what does it mean? It means the profits and the loss is magnified. You see a dollar, but you have paid $3 or $5, $6 in that dollar. Okay? It's magnified. In stocks, no. In stocks, it depends on how many shares you buy. And it is so easy. It is so easy to calculate. Okay? So in order to go there, you should be a professional. You should have more command, because the risk is different. You can wipe out your account in a few hours if you don't know how to trade and to exit on time. Especially futures. Yes, it's very good to specialize in one stock and to always do to sell short or to go. Yes, it's very good if you stick with one stock. It's very good, because you will know the people who are trading. You will know them. You will know how they move, and you begin to understand that these people, you are analyzing the people. Not the price, because the price reflects the people intentions. Okay? If the stock begins to go down, it means people are shorting. If the stock is going up, it means day traders and swing traders are buying. So it is so simple, but you should stay longer with them until you understand all this stuff. Fida Hashim, how are you? when you say hell, sir, I say, what's this hell? Okay, I thought you say hello, but you say hell. Oh, I say no hell here, just paradise. Yes, Fida Hashim, you are late. We are 1:19. Thank you very much, Fida. So, as I told you, things about this week was very troubled with gap apps with Facebook and Twitter, and gap down with Apple. Now we will see next week. Does, for example, Facebook and Twitter go up again? They continue what's going on, or they make a trend, or they go down. And Apple, does it go down next week, or it stops going down and go up? This is what we will see. What we will see next week, if God wills. Yes, Fida, thank you for you say auto correction. Yes, thank you very much. Yes, next week the election in USA. Yes, it will be a very troubled day. Tuesday is the election, I know, but we will see. We will see next week. What's the next trend in the market? We don't know. We don't know. It depends. We will see next week. Okay? We will see next week. We don't know. So for me, I try not to predict or to say anything. If I am in a trade, I stay in my trade until I see the opposite. If I am making money, I stay. If I don't make money, I exit. That's the rule. Trump, which stocks do you short? No, I don't. I didn't short any stock. No. And as I told you before, next week will be very troubled, like this week, since we have the election. The market is in a short squeeze. You know, those who short, they are day traders. They don't stay. It's people who stay longer who get a short squeeze. It's not everybody. Day traders, they buy, they sell the same day. The people who got a short squeeze is the people who go overnight. It means they hold the stock for overnight. That's why it's just heading north. Yes, this 4 or 5 days. Yes, the market is doing good these 4 or 5 days. I have just explained that in the beginning. And next week, we will see next week what is going on. And it depends on where you are in the market. As I told you always, stocks are different. Some stocks go up, some stocks go down. So it depends where you are. Okay? So as Trump said next week is going to be troubled because the Republican will lose. So you will say the Republican will lose. How do you know? It means you are saying to me the earnings of that company before the company announces. You know better. So this is insider information. Have you seen the future? Or have been in the future? I don't predict like you because I don't need to. I don't need to predict anything. If the Republican wins or the Democratic wins, is there a change in America, you mean? There will be no change. It's the same thing. If you are having a good job, you still have a good job. If you have a bad job, you still have a bad job, or you are you have no job, or you are in the street. Your situation will stay. What will the election brings you? Okay, this is for the people who make money. Fida Hashim said, "It is a good idea to specialize in one stock for swing or day." No. In swing trading, you can do in many stocks. But in day trading, yes. You should find a stock that moves good. daily. $2, $3, $4 in order to make money. Because if the stock moves 10 cents in a day, how can you make money? It will be very, very difficult to make money day trading. Okay? So you should have some stocks that move very good, and whenever you use them, you can make some money. Trump said Facebook isn't a growth stock anymore. Watch that. Now I think last week you said that Facebook will have a gap down. Did you say that last week? Well, what does this growth stock? Growth stock, it means most of the time it doesn't give dividend, and Facebook doesn't give dividend. It has nothing to do with the taxes and with the buybacks, or I don't know what you are talking about. Okay, I don't know what you are talking about. What does this taxes do with Facebook? Well, what is the thing I watch? Facebook, I watch it from the day one when it is an IPO. So it is you who should watch this thing. Facebook is going down. Man, I was in the gap up. I make money. I don't care about the future. I care about what I did. I wasn't in Facebook and I make money from it. I was not in Twitter. Okay? I was not. So I was with Facebook. Yes. Yes, I was in Facebook and I bought it. Is Shop a good one for day trading? Shop, I don't know. What's this stock? Shopping? Shop. It's a big stock. No, Shop is like a... It has like a lot of short sellers. A lot of short sellers. It's very good. But it is a big stock. It's a big stock. Now for you, it doesn't mean that you should need a big stock. You can see even a stock that it is $5, $7, $10, and try to count how many shares you want to buy each time in order to make money if you are good in finding the direction of the day. Okay? You don't need, for example, $2 or $3 each time that the stock in order to make money. You can buy more shares if the stock is smaller. That's it. Thank you very much. Hello Andy, how are you? Clown Twitter account say you don't trade. I gamble like you in earnings. No. I see. When I buy a stock, most of the time I don't buy it because of earnings. Earnings is when I was in a stock, I will not sell because of the earnings. That's it. But it doesn't mean I go to earnings and I buy. I don't do that. No, it's not what I mean. You have understood me wrong. I don't gamble anymore. Okay? I always trade according to my criteria. When I find the criteria, I buy. I don't say there is a gap up or there is a gap down. That's why I should buy the stock. I don't buy a stock because of earnings. Okay? Because if I do that, I will wait 3 months and then I will follow just 1 or 2 or 3 stocks and I do a trade and I see what will go. No, I don't do that. I follow trends. I don't follow earnings. So, Aura probably said Amazon, one share can move immediately. Yes. I am okay. How about you? What do you think about Baba? We just made I show Alibaba. It has a gap down. It's like Facebook. It has done. It was a long downtrend, a very long downtrend. Yes. So I can show you. I'll show you again Alibaba, but I showed you before. Okay, let's see Baba. As you can see here, it's a long downtrend. You see, a long downtrend. It's the same as Facebook. It's the same as Facebook. You see, a long downtrend. The stock was 211, like nearly Facebook. Now it's 147. And today we have a gap down. It's not a gap down, but the stock has go down. But it's not a big deal. $3.66 and 2.42% for the earning news. It's not a big deal. So Baba is okay. But understand that it is a downtrend, and we will never know where or when it stops and go up again into a trend. Like this trend, like the other trends. Like this trend you see here. When it will take up like this trend. Okay? Now, it stays very long here. It stays very long here. Now, this is doing nothing. So this is for Alibaba. Now, Rama Krishna, how you handle gap down like 20% for any stock? Now listen, when you say how do you handle gap down, listen, it's your choice to take the risk of holding a stock on the news. Now you know the news when it comes. So if you are scared to have a gap down or gap up or whatever, just sell your stock before the earning news. Because when you get a gap down, you can do nothing. What you can do? You lose 20%. Okay? So you can do nothing. So if you think that 20% at one time is so big, do not trade in the earning news. Sell your stock, or if you want to buy, don't buy it before the earning news. So this is the only suggestion I can tell you. Okay? Because it's very hard. You will never know. And no one knows. Don't try to think that some people knows if there is a gap up or gap down. No one knows, because it's the company who announces the information. No one knows. So it is up to you. If you don't like, if you, for example, if one time you get hit with 20% down, gap down, in the future, don't do earnings. Gap up or gap down, it's not for you. Just forget about it. Try when you buy a stock, whenever you reach gap down, whenever you reach earning news, you sell your stock before the earning news. That's the good thing about what you should do if you don't like earnings. Because earnings, you don't know, you will never know. Maybe you have a gap up. Maybe you have a gap down. So there is always a risk. Okay? Rama Krishna, is Facebook good time to buy? Listen, Facebook has a gap up, but we don't know in the future if it goes up or goes down, so I don't know. If you want to take my strategies, you should either be my golden subscriber, or you order some training, and then you can know when to buy Facebook or any other stock. You should know there are criteria that we should use and a signal. It's not just you buy Facebook or buy Twitter and you just hold it. No, it's not. It doesn't work like this. Andy said, I made about $643 on day trading from Baba, but I am planning to buy and hold for a long time. It's your business. If you want to buy a stock and hold it for 1 year or 2 or 5, this means that you are doing investing. Investing, it is not a trading. You should know, you should try to study the company, see competition, see earnings, and see if Alibaba is the best company to buy as an investment. So it's not just I buy this stock and I leave it and that's it. No, it will not work like this. A clown Twitter account say why the market was reacting negatively for good news recently, for good earnings. It's just because it's the people who decide if they go long or they go short after the news. It is not a sure thing. It doesn't mean that when we have good news, it means the stock will have a gap up or go up. Sometimes with the good news, I see Facebook before with good news, good earnings, and it go down. This is because the people, the day traders, they do whatever they want. It depends on the people's actions. So the price they give you is the price what they decide to do. Okay? Oran Previous said never hold through earning when day trading. Yes. This is very known. So when you are a day trader, always think about, for example, day trading. It means you stay through the day, you do whatever you want to do, and then you should exit before 8 o'clock at night. You should exit. You shouldn't stay. Because when you stay, you will be doing swing trading. Swing trading, we don't buy the same stocks as day trading. Day trading, we see the fluctuation of the day, how the price changes in the day. But swing trading, we should see the trend changing price. Okay? That's it in general. Oran Previous said, will Apple utilize buybacks to raise their stock price? Now, listen. I'm telling you something about buying and selling. When there is a demand of the stock shares, whoever buys, it's not just the company, whoever buys, the stock will go up because there is a demand. The company cannot move up or down its shares. If they can, all the stocks will go up. But it is impossible. It is impossible. Because the company can't buy their shares back, all the shares, because they belong to the market, to the common shares in the market. They should have certain quantity in the market that the company should never buy. This is the rules of the stock market. They can't own all their shares again because it becomes private. So they can't. Even they buy some, but they can't because they need their cash to do investment, to do all the research for Apple. They need their money. They can spend money in stocks. Okay? Fida Hashim, can you exit at 8 o'clock? I say before 8 o'clock. You should not wait until 8 o'clock. 7:59, the market close. Definitely. So in order to exit, it should be 5 or 6 or 7. Don't wait until the end. Okay? Don't wait until the end and see your broker if he accepts trading at that time. Because some brokers will stop trading at 5 or 6. So you should ask your broker if he is open to the market until 7:30. You should ask. If he tells you no, they will stop at 6 o'clock, it means you can't reach your stock. So you can't sell it or you can't buy it. So understand, ask your broker before you do a trade. Fida Hashim said, I thought it is between 9:30 and 4 p.m. No, this is the market trading hours. But there are market before market hours and after market hours. This you can use a limit order only and you can buy and sell. But it is very hard, okay? It's not easy, except when there are many traders there. So most of the time you find the bid and the ask. you find them very, very large. So that's why the people, they don't trade at that time. Except when there is the news. When there is the earning news or news, a lot of people, they come to buy and sell. So the bid and ask will be tight. Okay? That's it. Oran probably said, so many companies utilize buybacks and their true valuation are in question. Yes, but understand, when they buy back, it doesn't mean they buy the whole market. They can't. Because of the laws, they can't buy a lot. So there should be mutual funds or other people who buy. Or probably said, after hours limit orders only to exit if you get filled. Yes, it's very difficult. That's why I told you, try to be careful. Don't buy too much or sell short too much when you are in after hours. Because if you can't exit out, you will have a problem. Okay? So don't leave the stock at the end of the hour. No, there is no market orders after or before the market opens. There is no market. So how can you use the market and there is no market? There is only limit orders. Only limit orders. And it's hard to be filled. So be careful of trading at that time. And if you buy or sell, don't buy too much or sell too much. At least if you get trapped and you can't sell, you have just to face that small problem. But if you bought thousands of shares, maybe you sell short and you are making money, and then you can't exit. You want to exit to sell because you make money, but you can't exit. They don't let you. Here you will be in trouble. Okay? So be careful of that. So it's very good that we have gone so long for 1 hour 42 minutes. Is very good. So at the beginning I thought we will have only half an hour or so, and then I stop because there are just few people and people, they don't ask questions. That's why I was just thinking to stop the live, and then we can, because today I think we have the holidays of the Halloween, and a lot of people are having friends and having friends and having maybe family members, and they can't come to the live because of these events. But it's okay, it's okay. Whatever people are here, we try always to answer the questions as I can, and that's very good. Yes, clown with Twitter account, parties, yes. A lot of people are the weekend, especially in the Halloween season, they are together, and so that's why today I don't get that much people coming, but it's always good. Thank you very much, clown with Twitter account. Keep up the good work. Thank you very much. I'll try to do the best I can and to have the same time, because before I put it on Saturday and then some people ask me to do it on Friday, so I'm trying just to change it each time and try to see how we can get more people involved and they can ask questions and we can share information like this, because a lot of people, they have always confusion, especially in buying and selling and the other stuff. So I'll try to just to make it simple for them. Okay, so if we have no questions after that, we can just end the session. And I'm trying to do my best. Trump is so annoying on this chat room. He's gone already. Trump is your friend, I know, because he was defending you last time. Okay, he was defending, so Trump is with you. So are you a Republican? I don't think he's a Democratic person. He's Republican like you, I guess. So that's why he is like mad, maybe. Andy said day trader, swing trader, and long-term holder. Yes. Thank you. Good night, Sir Fida Hashim. So yes, Andy, it depends on the people what they choose to do. Thank you, Sir Knights. Thank you. Have a good weekend, and hope you enjoy your weekend. And the elections will be on Tuesday, and it will be a troubled day on Tuesday, I guess. So it will be fun to watch all this stuff and this news. Okay, so thank you very much, and please, if you have always questions, so please, you should always ask questions. Okay, you should always ask questions. And here is, I don't know, maybe you always have my website and my email, but some people, they don't have it. So I will just make sure they have my website. And okay, yes, at least they have my website and my email. So I will just put them right now here. You can find them in the description of the video. Each video we have the description. Okay, so here is the website and the email. Please, those who don't have my email or website, you can click on them, and you can copy them and hold them, and they are always in the description. You can just find the description and send me an email if you need me. Thank you very much, Honorables. Thank you very much for all you guys, and hope to see you next week. Thank you very much.